CNBS video with the title Tesla is the OG meme stonk. Bro, we got to watch this.
Has got one analyst reminiscing about the good old meme stock days. In a new note this morning, Barclays credited the stock's run up to retail excitement surrounding the EV maker's upcoming annual shareholder meeting. They say this rally feels similar to the bull run that took the stock to all-time highs back in 2020 and 2021. Barclays' Dan Levy joins us now to break down his note. Dan, great to have you with us.
So the original meme stock, huh? Obviously in relation to GameSpot stock. That truly was an actual meme stock. A bunch of total gambling degenerates on Reddit collectively deciding to pile into GameSpot stock, a company with a fairly low market cap. As a result of all the money pouring in, stock moons, more people pile in, stock moons further. We know what happened there. Some may argue that GME stock represented a great buying opportunity at the time. Some may have even liked the stock, but I think, let's be honest here, most people who bought the stock were either doing it because they're a dumbass, because everyone else was doing it, or just for the lols. Very little analysis, if any. Very little expectation that the value of the company in the future would be meaningfully higher than where it were today. A lot of people with FOMO piling in. So, is the term meme stonk in reference to Tesla being used pejoratively to suggest that Tesla investors are retarded degenerates who are just gambling and have no idea what they're doing? Or a more charitable interpretation, maybe he's just referring to a stock with a very popular following among retail investors.
Thank you so much for having me, Melissa and Mike.
Calling a stock a meme stock is almost like an insult. That the implication.
Oh shit, I spoke too soon. See, Melissa Lee's getting to the crux of what I was just speculating about. Often, the term meme stock is used as an insult to imply that the investors in said stock are brain dead, retarded, don't understand valuations, don't understand multiples, you don't understand the rules, you don't understand anything, you don't wear a suit, therefore you're retarded. You didn't do any analysis. The stock's massively overvalued, can't you see? The competition is coming, Elon bad. Everyone's going to press the magic catch up to Tesla partner, you're so dumb. This is why earlier I drew the distinction between GameSpot stock, which truly was research. Nah, fuck that, bro. Stock go up, I'll just buy some, everyone else is doing it. Versus Tesla, where the vast majority of Tesla retail investors, as deluded as some of us may or may not be, have at least attempted to understand what the future valuation of the company would look like, and are not holding this stock because stonks go up, or because everyone else is, but because we believe that years from now we're going to be very glad we're currently holding Tesla. So I'm glad Melissa pointed this out. Now, I also did say in the intro here, maybe he was just referencing the fact that it has a very cult-like following, although that wasn't always the case. But I'm glad that Melissa Lee pointed this out, because it is extremely often, especially among analysts and traditional investors, thrown around specifically relating to Tesla, specifically to deride and insult Tesla retail investors, who, by the way, if we're checking the scorebook, have created truly substantial amounts of wealth on this so-called meme stock. So let's see how he responds.
Being that there aren't any fundamentals behind what is moving the stock. Is that what you're trying to get across, or just that the moves can be wildly sharp, and just suddenly? I mean, I'm just trying to figure out if this is sort of an indictment of the stock, or if this is actually a good thing.
Well, there is more to the stock than the meme phenomenon, but the reality is, as we point out in the note, it is the, so to speak, OG meme stock.
Well, here we go. Price target $275. Should we, you know what? I don't care what you think. Yes, we're going to. Right, ready for this? Let's just check. I've got a feeling about Dan here, who is seeming to suggest that, yes, Tesla investors are in fact retarded. The stock's overvalued dramatically. Let's try and dig up some of his history on Tesla price targets, for example, or just overall track record. For example, if Dan had been covering Tesla stock for a number of years and historically had been meaningfully off the mark to the downside for almost that entire period of time with his price targets, rather than insinuating that perhaps Tesla investors are retarded, perhaps instead he should observe his reflection in the mirror to find where the actual retardation lies. Oh wow, Dan's almost a 1-star analyst according to TipRanks. Currently ranked number 8,677 out of 10,050 Wall Street analysts. Now, I don't mean too hard on Dan. No, I don't need to. Just look on screen now. No, but seriously though, the way that TipRanks calculates this is based on recommendations over the past 12 months. It's pretty short term. Even so, Dan's average return per rating is negative 2%. His quote-unquote success rate, how often his recommendations have resulted in a positive return, 39%. So he's dramatically underperforming a coin toss, by the way, in the equity markets where over time just about everything goes up unless you're completely brain dead and just can't pick anything. I mean, bro, just buy a fucking index fund. You're going to smoke this guy. But it is, of course, only over 1 year. However, if we look at his Tesla price targets over time, the success rate, 35%. But wait, it gets a lot worse. This very intelligent guy in a suit, mid-2019, Tesla stock split adjusted, about $15 a share. Sell. July, sell. September, sell. October, sell. Still around $15 a share. November 22nd, 2019, $14.72 per share. Sell. By the way, roughly exactly when I started this YouTube channel. So the stock's about $14, $15 a share. This retard, yes, I'm going to call him a retard because it's true. I mean, we can look on screen now. How else can you interpret this? I think Dan's the meme, not Tesla stock. He's telling people sell. Then the stock rockets higher. And I'm not kidding, by the way. I started the YouTube channel basically exactly here. I'm like, hey guys, I don't think people are understanding what's about to happen. Just say it. Next minute, Tesla stock surges. But here's where things get interesting. Mid to late 2019, this guy, $15 a share, $14 a share, sell. Then suddenly, a few months later, not even 6 months later, the stock was not doubled, tripled, but quadrupled and then some. Maybe up 4, 5 plus times. Now, instead of advising people sell the same stock that 6 months earlier at 20% the price he was recommending sell, now, no, don't sell, even though 6 months later it's 4 or 5 times as much as I thought you should be selling for previously. No, hold instead. And he recommends hold all the way up through 150, 160, 200. Again, these are all split adjusted. 216, 258, 354. Hold. The same guy, a couple of years earlier, sell in $14, $15. No, hold. All right. A couple of years later, the stock's up 25 times more than he was advising people sell. And no, just hold. Then, what happens then? Now, suddenly, he's recommending investors buy in the high 200s. But at those same and lower levels just over 12 months earlier, hold. And then, of course, the last buy rating from Dan was approximately June 15th, 2023, at which point he was recommending investors buy with a price target of $256.96 per share. Since then, Tesla's made phenomenal progress, especially on autonomy. They've launched in Austin, expanded in Austin, launched in California, expanded again. Crazy progress, never mind the stuff happening with the Optimus humanoid robot. And Tesla's still the only company making any money selling electric vehicles. Booming energy business, yet the price target for the next 12 months, 275, is essentially identical to where it was in mid-2023. For the record, his average return on these recommendations is negative 55.7%. I mean, if this was me, I would just retire. So we'll get back to Dan and look, at least he's sticking to his guns. I mean, you've got to give him credit for at least seeming to believe in his price target after having looked at the truly embarrassing 6-year history of this derp. Massively underestimating Tesla. Imagine that. I kind of called it ahead of time. How did I know? Well, geez, let's see. He's still at 275 and he's insulting Tesla investors, suggesting meme stock, yes, retarded. No analysis, no fundamentals, etc. But while I'm taking a dump across the face of this particular analyst, maybe he likes it, who knows, not judging, I've asked Grok for some help here. Analyst price target increases and upgrades for Tesla stock. During the month of September, I'd noticed quite a few recent price target increases. Initially asked Grok, hey Grok, in the last sort of roughly 2 weeks, can you list all the price target increases? But I then said, you know what, let's be fair, let's do the full month of September. And Grok responds, well, the first change was actually the 17th of September. Prior to then, there was only one, which was Dan Ives of Wedbush just maintaining $500, aka just trying to stay in the news. So now I'm not going to suggest that the entire analyst industry is in fact the fucking meme stock equivalent. No thought, just a lot of FOMO/chasing behavior. But the very first price target increase on Tesla stock in September, after very little movement actually for quite a few months from the analysts, occurred on the 17th. Remember, they launched their Robotaxi service in Austin without anybody behind the wheel late June, around Elon's birthday. So a few months later, and then on September 17th, we have a big price target increase from 300 to 450. Next day, another one from 360 to 450. The same day, the 18th, so 3 target increases in 2 days, 300 to 395. The next day, 320 to 548. 3 days later, 400 to 500. 1 day after that, 375 to 450. 3 days later, 345 to 435. Same day, 500 to 600. 3 days later, 120 to 127. Now, what we have observed here is, during the month of September, 0 price target increases in the first half of the month, and then suddenly from the 17th we have almost one a day, and there's substantial increases. So I've taken the liberty of pulling up the 1 month Tesla stock price chart. Now, does anyone want to guess on the chart exactly where the wave of price target increases began? Is it down here in the $320, $330 range, $350? Nope, there was none. $333, nope. $329, nope. $334, nope. $338, nope. $350, nope. $346, nope. $346, nope. $347, no. However, between the 10th of September and the 16th, the day before, Tesla stock surges over $70 a share, up more than 20%. Suddenly, having put on not far off $100 in a matter of days, again, we're in the low 300s here, mid 300s here, now in the low to mid 400s. Suddenly, we have price target increase after price target increase after price target increase after price target increase. You can't make this shit up. Meme stock, you say? Curious. Exactly what happened? For suddenly out of nowhere, analysts to be clamoring over one another with huge price target increases on Tesla stock. What happened to the business? What changed? Nothing. Nothing material at all, actually, for months since the Robotaxi launch, which we could have seen coming, but you have to go all the way back to late June for that. Then there's a Robotaxi service area expansion almost immediately after. Okay, call it mid-July. By mid-July, you knew everything you could possibly know about Tesla. But in mid-July, the stock was fairly flat, hadn't really moved a lot. Then suddenly, this happens, and now you have a fuck ton of price target increases. Is Dan projecting? Is Dan trying to cope with this entire industry? On average, his typical colleague being fucking retarded, clueless, and his history of completely missing the mark to the downside on Tesla. Is he trying to cope? Or does he really believe what he's saying?
Right. There is a very robust retail following that is driving it. In many ways, we've said the fundamentals just don't matter. That's why the stock trades at sort of a nonsensical PE multiple, 180 times 26.
There we have it. Retail investors who are retarded are the reason why Tesla stock continues to be meaningfully above my own estimated fair value over the last 6 years. It's not my fault that retail investors are retarded. Clearly, my analysis is flawless. It's just the fact that all these dumb retail investors who keep buying Tesla stock, who totally have tens and tens of billions of dollars to move the stock around consistently, they're the reason why I keep massively underestimating the fair valuation of the company. Tesla's multiple valuation, it's nonsensical. AKA everyone who's buying Tesla stock at these levels is retarded. Now, I mean, Dan could have a point, but I'll tell you what, having looked at his history on Tesla, him being massively wrong for more than half a decade, is this guy going to go to his grave saying the valuation of Tesla was nonsensical? Is there some point he goes, you know what, I was wrong. The market's obviously proven that. Like, how long do you wait before you go, dude, I give up? By the way, the last time I told an analyst to give up, he actually did. Remember Tony Sacconaghi? I'm not telling Dan to give up just yet, but he's getting close. He's getting pretty close, Dan.
Earnings. Bitcoin is really what we say is just the better comp. And then there's other technical factors as well that are driving it, Mag 7 relative performance, and also technicals such as option activity as well, that are much more than the typical direction of fundamentals.
Yeah, one of the fundamentals, though, is that Elon is back and he's as engaged as ever. And I wonder if you think Tesla has left behind its sort of political issue in terms of being aligned with politics that not everybody necessarily agrees with, that hurting market share, particularly overseas in Europe.
Yeah, it's very hard to know how this will evolve, but I think what we are seeing is that at least for now, there is a more engaged Elon Musk. We saw that with his open market purchase. And really, that's what the comp plan that the board is proposing and that'll be voted on at the AGM on November 6th is really trying to get at, is a more engaged Elon Musk to focus on really the things that will drive growth for Tesla. So there's no guarantee, but it really is a big step forward in guaranteeing Elon's engagement and focus with Tesla.
I mean, Dan, arguably the retention of Elon Musk or having him more engaged is most of value to kind of keep the story running and feed into the retail fan base. I mean, there's $1 trillion in market cap of the, let's say, 1.4 trillion that Tesla has right now, which, is kind of about, hey, the future is going to be great and we're going to be a big part of it, as opposed to what they're doing on the vehicle side.
Yeah, I mean, this is an ultimate narrative stock, right? It's again, the vehicle sales the earnings power that you see today from vehicle sales is in many ways, a fading story. The future growth that is there, and that does underpin the view of bulls, is something that people are getting excited about. But in many ways, Tesla gets the credit for this today versus others that may not get the same credit because of the power of the narrative and the power of excitement around Elon Musk and what he's done for them.
I just decided to pause here. Very rarely do you see any yeses answered to these potential conflicts and disclosures. Dan's firm, greater than 1% held in Tesla stock. Cool, who cares? What about this? Other conflicts. What does that mean, other conflicts? I've never seen a yes to other conflicts. Anyone have any info? Now, Dan made some sort of half fair points there. Tesla is getting some credit for future success, obviously. But this isn't just a narrative stock. The reason many investors are giving partial credit to some future success for Tesla is their historical track record of doing what the fuck they said they were going to do. I know it's crazy, but you post something in 2006 saying, "Here, motherfuckers, we're going to do this," and it sounds absurd and impossible and no one else is even trying, aka Master Plan Part 1, don't tell anyone. And then, after publishing that, roughly a decade later, you've done everything you said you were going to do, which everyone at the time thought was impossible and insane and you weren't actually serious about. You go, that was pretty cool. I wonder if that was just a one-off, doing the nearly impossible, not going bankrupt somehow along the way. That was pretty incredible. Starting at the high end with low volume, high price electric vehicle, reinvesting those profits and proceeds to develop new technology and scale up a higher volume vehicle, blah, blah, blah. We've heard the whole thing. Then, if that same company, a decade after that first plan that everyone thought was impossible that they somehow pulled off, then publishes a second master plan with a bunch of seemingly impossible goals, and roughly a decade later has basically done that all as well, and along the way has embarrassed the entire existing automotive industry, embarrassed every one of the so-called experts who said the competition was coming. I swear they're coming. I mean, well, this year they're coming, or they'll be coming soon. They said they're coming soon. They're coming, okay, they're not coming. At some point, you've got to go, well, this company has a history of setting audacious goals and not only setting them, but achieving them. At some point, you've got to go, okay, I probably have to give them a little bit more credit than I would most other companies, given their historical track record of doing the nearly impossible over long periods of time repeatedly. But it's not just that. In addition to this important data point, historical track record of execution against audacious goals, despite the skeptics, the naysayers, the experts, and the doubters, you also need to be paying attention to what the fuck is actually happening. For example, watching Tesla with their attempts to solve autonomy vision only, the huge rewrite end-to-end V12. We talked about this. If you're new, sorry, go watch an old video, or I'll repeat myself in a future video and explain. You've got to be paying attention to go, oh shit, this vision-only approach that literally everyone said wouldn't work is, everyone who said you need LiDAR and GADAR and sonar and whatever else in order to drive an autonomous vehicle, apparently you don't, because Tesla's legally operating robotaxis for paying customers in Austin, Texas without anyone driving the vehicle. If you're actually paying attention to what the company's doing and you have the cognitive faculties to comprehend and a basic understanding of what's going on, I mean, if you don't try to understand it, well, you're not going to understand. But if you try, surely at this point you go, historical track record of phenomenal execution, plus all the stuff I can actually see happening right now. I mean, FSD supervised, for example, launching all the fuck over the planet on a handful of continents in the blink of an eye. FSD supervised just rolling out in Australia, New Zealand, and we've already gone past a million kilometres travelled in less than 2 weeks on FSD supervised in Australia and New Zealand since launching. Less than 2 weeks. In context, roughly 67, almost 69 laps around Australia, not across, around Australia. So if you're actually paying attention to what Tesla's doing, the foundation they've built, their general solution to autonomy, vision-only approach, how quickly they're scaling, incident-free globally, it's not retarded to weigh the probability of success on these obvious and inevitable endeavors. Instead, it's retarded to ignore them. The dumbest thing you could possibly do as an investor or an analyst is to see what Tesla's doing and not ascribe some probabilistically weighted value to future success in the things that are obviously and inevitably underway and going to happen. That would be really dumb. That would be nonsensical. I think the short story here is, so far, over the last, call it 6 years, retarded Tesla retail investors, 1, very intelligent analysts who wear suits, so therefore you can trust them, 0. Want more content? Early access? Bunch of perks? Click the links in the pinned comment. AG1 is awesome. I've been taking it daily now for more than 3 years. It's a great way to fill in nutritional gaps. It's packed full of vitamins, minerals, and whole food source nutrients, plus has prebiotics, probiotics, and adaptogens to improve gut health, regularity, and help your body handle stress. I'm always looking for an edge to help me feel and perform my best, which is why I haven't missed a day of AG1 for more than 3 years. Just try it and see how you feel. Click the link in the pinned comment or head to drinkag1.com/SMR and get yourself a free 1-year supply of vitamin D3 plus K2 and 5 travel packs.